The emerging industry of artificial intelligence, also known as AI, is projected to become a $1 trillion marketplace over the next 10 years. Now, behind that growth are massive infrastructure needs required to support the demands of the AI industry. Which metals in the commodities market stand to benefit most, and what ETFs offer an opportunity for investors to participate? Find out right after this. You're watching Shifting Energy. I'm Thalia Hayden with ETF Guide. Thanks so much for joining us. According to Bloomberg Intelligence, with the influx of AI programs like Google's Gemini and OpenAI's ChatGPT, the AI industry is poised to hit $1.3 trillion over the next 10 years. Now, the question is, what will the AI infrastructure build out look like? Which metals in the commodities market will be needed to support it? And which ETFs offer investors an opportunity to participate in the AI growth trend ahead? Helping us to answer these questions is John Ciampaglia, CEO at Sprott Asset Management. Welcome, John. Great to see you again.
Yeah, nice to be back.
All right, let's get started here. Research from Goldman Sachs organized the AI investment opportunity into 4 phases and said that phase 2 will be about companies in a supportive role that are helping to build AI-related infrastructure. What is your take on this?
Yeah, I mean, the investors have been really infatuated with all things AI over the last year or so. I think everybody knows NVIDIA, the company, is one of the leading chip manufacturers. What about all this, second, third, and fourth derivative type of industries and companies that are going to be important to the build out? So once you start moving away from the chips, you obviously are talking about a lot of infrastructure. And I'm not a technology expert, but obviously you're running these very large AI data centers, and there's a lot of equipment in there. But I think investors, rightly so, are going further afield from the building itself and asking the right questions around which of the industries and the companies are going to benefit from this. And one thing that investors are learning very quickly is that these AI data centers are very energy hungry. They consume significantly more energy than a typical cloud-based data service that you would be using, let's say for Google searches or storing digital content in the cloud. And so investors are looking at, okay, which are the companies that are going to be providing this energy? What kinds of energy? And one thing about technology companies is that they're very focused on net zero and low carbon footprints. And so as you can imagine, they're looking for stable, reliable sources of energy to power these data centers, and preferably if they can find clean energy, which would encapsulate things like solar farms with large scale battery backup storage, nuclear energy in traditional large-scale format, as well as small modular reactors, which is an emerging technology that I think has a role here to play. So, I think it's fair to say investors are looking at the whole supply chain, trying to figure out which companies are going to benefit from this build-out over the coming decades.
That certainly makes sense. So in your opinion, which metals stand to benefit most from the AI infrastructure build-out?
Yeah, so if we let's focus on energy a little bit, because I think it's really interesting that if you look at electricity consumption in the United States over the last, let's say 50 or 60 years, we had a period of rapid growth, obviously as population was growing and things were industrializing. And then in about the last 20 years, it's been largely flat. We've had no incremental electricity consumption. Now, the reason for that's quite simple. Engineers are very clever. And they're constantly figuring out ways to reduce electricity usage through efficiency and new technologies. Now, if you're thinking about a utility that's been operating in an environment for the last 20 years that has no incremental, customer demand, and then all of a sudden you have a bunch of customers coming to you saying, "Hey, we're going to need a lot more energy from you." There's a real mismatch right now because the technology of AI is moving so rapidly. And when you contrast that to utilities, which is probably one of the most slow-moving industries in sharp contrast, these utility CEOs are signaling that they're getting requests from their technology, mostly their technology company customers, that they will need more energy down the road. So as I said, these technology companies are very focused on clean energy. What are the key metals related to that? Well, obviously, silver is a key metal in a solar panel, which most people probably have no idea. Copper is obviously very important in terms of connecting all of these things. And large scale batteries are primarily lithium ion batteries. So another range of different metals in those batteries. And then the second application we're seeing is with nuclear power specifically. And I think there's a really good example to highlight. Just a few weeks ago, Amazon Cloud Services bought a data center from a company called Talon that was co-located right next to a nuclear power station in the state of Pennsylvania. I think it's the perfect example of how they're co-locating these very large data centers next to power sources. They don't want to go to the grid to get power. They want to basically take it directly from the solar farm that's connected very close by or located very close by, or in some cases, a nuclear power station. So nuclear power, obviously, the key metal there is uranium, which we've talked about before.
Okay, got it. Makes sense. Now, supply and demand imbalances are a big concern as well, with demand for certain metals higher than supply. The AI infrastructure build out is a major trend, but so is the transition to renewable energy. So in your opinion, will the supply side of the metals market be able to meet the demand side?
Yeah, and I think this is a really interesting part of the story here is that, as the world is shifting back to a broader range of clean energy technologies, we see, for example, last year in the United States alone, if you look at all the net additions of electricity generation that were added to the grid, 86% of it was actually non-fossil fuel based. So everything from solar, wind, large scale batteries, and nuclear energy. And those technologies are very mineral intensive as opposed to fossil fuel forms of energy. And so, yes, I think the world has realized that critical minerals are a key part of the story. There are structural supply deficits in key minerals such as uranium. And I think the world is starting to take note that copper is another very important metal that it looks like a supply deficit is building on the horizon as things like clean energy consume ever increasing amounts, electric vehicles, which obviously have been growing around the world and are much more copper intensive. So I think the world is realized that, we need more copper supply, we need more uranium supply, and we're starting to see the prices of these metals respond in a way you would expect them to, which is they're basically going up to incentivize these producers to make the necessary investments to ensure, we've got security of supply long term. And that's obviously very beneficial for, the copper mining companies and the uranium mining companies, et cetera.
Okay, we got some clarity there. Now let's switch gears a little bit. S&P Global Market Intelligence recently reported that companies within the mining sector itself are seeking to leverage AI to help with their exploration efforts. For example, Rio Tinto Group is now using virtual mine models to test in the field decisions ahead of execution. Now, do you see this trend continuing?
Yeah, I think companies right now, it's still obviously in a nascent stage, but I think companies around the world are trying to figure out how to leverage AI. Obviously, it's to streamline costs, but also to become more efficient and effective in their decision making. And it's still early days, so it's hard to really understand how important and how valuable these tools are going to be. But the technology is very powerful, and it's changing so quickly. And as the technology evolves, I think it's going to become more and more valuable, and we're going to see more and more adoption, which is, why these data centers are really starting to try to get ahead of the curve, knowing that the deployment is going to accelerate from here, and hence the amount of infrastructure and clean energy sources that they're going to need in order to, implement this build out.
Now, John, Sprott's ETF lineup offers a lot of choices. How can investors position themselves to participate in the AI infrastructure build out?
Yeah, so with respect to the metals that I think are going to be the most prominent as part of this thematic, it's not just AI, it's obviously a whole host of clean energy technologies and decarbonization technologies. We really see two metals playing key roles there, and that's copper, just because in a push to electrify everything, and move electrons around, whether it's for data centers or energy production, energy transmission, and finally energy storage. Copper is really the common element across so many different forms of technology. And uranium, we think, is going to be or will remain a very prominent metal because the world is shifting back to nuclear power. And if you think about a data center having to operate all of the time, a nuclear power station is really the ideal complement because nuclear energy runs 365, 7 days a week. And so it provides you that reliable baseload power, which data centers and other technologies need. So we see those two as probably being the most closely linked. And then you've got some battery metals that I think are going to play secondary roles. Silver, as I said, in the production of solar panels, about 14% of all the silver each year actually goes to the production of solar panels, which I think most people would have no idea. But silver is incredibly conductive as a metal, which is why they put it inside of a solar panel. The last metals I would say are probably related to lithium ion batteries, because as we build out more solar, they want to store energy when it's readily available at peak sun hours and store it so that they can draw down the energy when the sun obviously isn't shining. So we see lithium ion batteries also playing a key role here.
And that's all we have time for. We're going to have to leave it there, but we want to say thank you, John, for your valuable insights. And of course, we look forward to seeing you again soon.
Thanks for having me. Appreciate it.
You got it. That does it for today's episode of Shifting Energy. If you enjoyed the show, tell us in the comment sections below, please, and hit that like button. To learn more about investment strategies and ETFs we discussed on today's program, you can visit SprottETFs.com. I'm Thalia Hayden with ETF Guide. Thanks for watching, and we'll see you next time.